Welcome everybody to the Chinchilla Pickin' Podcast. It is November the 24th, 2024 at 4:17 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the famous, the important, the amazing, the superlative, Brandon Beaver.
I don't know what that last word means.
No one knows. And that's what makes it so cool.
Have to jump on my AI chatbot, the smartest person I know, and ask them.
I don't know what kind of adjectives I'm just gonna start throwing
Superlative.
out there now.
I've heard it before, but I don't know. Super.
Superlatives also kind of it's also somewhat like a adjective, but here I'll get you the actual definition.
Jesus,
Um,
starting off the show terribly.
we are, but it's
This is the most
a
boring
superlative
start.
is yeah, a superlative definition is of the highest quality or degree,
I'll
a
take it.
superlative piece of skill.
Oh, you meant that. You meant that the
So,
first time you said it. You didn't even know what it meant, supposedly, but it wound up
well, I didn't
describing
know the technical
exactly what
definition of it. I didn't
it
know
was.
the technical definition
It
of
was
it.
exactly what you were trying to say. And by the
There
way,
you
I
go.
agree.
Of course you do. Of course you do. Of course you do. Yes, it is the Sunday before Thanksgiving. Typically, this is the week that everybody's looking at retail. Black Friday sales, Cyber Monday sales, holiday sales, sells this, sells that. And then we have that half day trading day on Friday that Brandon hates that I think is really awesome. You know,
Pointless.
it's
No,
not pointless.
wait, here's the thing though. I know we all need to relax for the holidays and everything. I get Thanksgiving being a day off, and does anybody really work on Wall Street anymore? If you go into the stock market, I'm sure there's some traders there on the floor, but it's nothing like it was in the 80s and 90s. And when me and you first started, even in the 2000s, it's nothing like that anymore. It's
Well,
all
they don't have
digital.
to. Yeah.
There's no, I mean, even if there's not that much liquidity because people aren't really paying that much of attention to it, why close the stock market down? I don't, there's no need anymore. We could trade 24/7 now if we wanted to.
Right. And are you for that?
Yeah, absolutely.
Really? Trading 24/7?
Why not? I'm sure there's
Yeah.
some
You know what?
benefits, but I don't.
I seriously paused and was thinking, and I was like, I don't got anything. I don't have
Yeah.
a reason why not.
All the stuff's done digitally automatically now. I mean, we don't really need a middleman in any of this anymore. There's no need to
And
close
they
it.
did lower the amount of days we have to wait for our funds to settle to one. I mean, it should be zero, but
I mean,
one's better than what it was.
crypto trades 24/7.
Yeah.
No middleman broker. There's no need to stop it. I don't know. Maybe there is a need, but I don't see it.
Yeah. 24/7 markets. You heard it from Brandon Brever first. All
Right?
right.
Yeah, I'm sure it was first. I'm sure nobody said it before me.
All right. Well,
Breaking
uh,
news.
breaking news. Never said before. With Thanksgiving coming up, yes, retail is gonna be where the focus is. Everybody's gonna be looking at what the numbers are gonna be, how the holiday is gonna look. I know you have said you have something coming up in regards to holiday and revenues, but as far as retail, what do you think right now, Brandon? Just off the top of your head, what do you believe is how retail's gonna perform this holiday season?
You know what? I think it's going to do pretty well. I think it's
Really,
going to, and honestly, like
scale of 1 to 10.
uh, 8.
Real that well?
I
Okay.
think it's going to be a really good year this year for retail.
I say 6.5 to a 7.
Really?
And the reason and why is something I've reported on all year that the retail companies ordered less inventory.
Yeah, but
They have less inventory to sell.
yeah, but they had overstock the last couple of years. And way over ordered even after COVID. It was crazy on the orders for them. So, I think that people have money to spend, and I don't know how. I don't know why.
Do you have money to spend?
But the number is there. Yeah, but the numbers are showing up that it seems like they've got money to spend, and I honestly I can't explain it, but it's a thing. So, that's in retail for me. I spent a lot of my work life, way too much of my work life in retail, you know, and it's one of the easiest sectors for me, at least, and maybe that's the reason why, but to invest in because
Because
you
you
could
understand
see
it.
it, and you understand it, but you could see it. You go into the stores every day, you know who's busy, who's not, you know, and all you have to do is just drive by even a retail store. You see that place is dead all the time, then you're probably not going to want to put any money into it.
Right. Yeah. No, I can see that. And all some of that also too is where it's geographically located. Some retailers do better in certain parts of the country.
Yeah.
So I mean, you have that as well. But yeah, I see it doing well. I see retail doing well, but not as good as they could have done if they ordered more.
Okay.
That's my 2 cents. Call for what it's worth. Anyways, we do have a show here, somewhat prepared. Brandon's prepared. I'm not. But he's always prepared because he's the Baron of Bond. So let's get into it. Rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show for you. Brandon, Mr. Baron, take it away.
Well, I mean, and here's one of the reasons why I think retail will do well. I've covered the travel industry recently. I want to go a little bit more into it right now, and they're saying record-breaking Thanksgiving air travel is expected. TSA is set to screen 18.3 million passengers between Tuesday and the Monday after Thanksgiving, a 6% jump from last year. And I think last
That's
year
a
was
big jump.
record. Yeah. Daily passenger record was set on July 7th. That's likely to be beaten this year, analysts are saying. The FAA is to use special aircraft or airspace off the East Coast and Gulf of Mexico, normally that is used by U.S. military to help this along. Um, they said that they're going to operate realistic schedules over the period. I would
Okay, what does that
assume
mean?
that's a
What's a realistic schedule?
I don't know. I don't know. But I would assume they're referring to the recent, shutdown and all the stuff that had to do with um Delta and Microsoft and
Gotcha. CrowdStrike.
yeah, they're trying to hey, your airline cancellations aren't going to be as high as they were before, hopefully. So when that happened. Um but I don't see the airline stocks moving that high off this. Look at United Airlines, dude. They've beat like six of the magnificent seven over the past year. As far as how high they've climbed.
Who?
Um,
United?
United's up
I'm checking that out right
129%.
now because I'm going to contest
129%.
this.
No, 129% just this year for United Airlines. And I'm frustrated by it because they weren't my pick. Delta was my pick. They're up 57%, so that's good, but it's not as good as 129% for the year. That's wild.
Oh, that is wild. Yeah, they were at 38 last year in August. Now they're at
Yeah.
95.
Yeah, so this is priced into the airlines, right? So really what I'm looking at, and by the way, I'm still a shareholder of GE Aerospace, so that's a little that's definitely exposure to this industry, albeit it's delayed gratification because, GE will see that revenue down the line as the wear and tear on these aircrafts happen because we've got this record amount of people traveling. But I'm just seeing this as disposable income. This is evidence that people have disposable income, which is why I'm saying I think the retail holiday season is going to be pretty good.
Okay. I mean, I maybe they're using credit cards.
It doesn't matter right now. I mean, in the
No.
future it will. In the
Yeah,
future it
right now
will.
it doesn't. It's
Yeah.
yeah.
United expects to fly 25 million passengers over the 2024 holiday period. That's up 6% from last year. Delta is projecting a record December quarter. Thanksgiving demand. I don't think this is going to be a catalyst for future stock gains. I think it's priced in. I also think it's the same thing when it comes to cruise lines, by the way. Caribbean's up about 127%, equal with United. Cruise Line Holdings is up 87%. Carnival's up 79%. So what I'm doing is I'm looking at this as evidence. I think that people have disposable income to travel. And rather than, in the past, right after COVID, travel kind of took up everybody's disposable income. They were doing the revenge, travel thing. And retail was kind of back behind that. Luxury goods was way behind that. I think rising tide is lifting all boats for this holiday season. That's my projection.
Well, I mean, all right. So yeah, uh, travel definitely it is priced in. Where did United come from this year? How did I not catch that? I don't really follow the airlines though, but um, that's crazy. I want to dig into United's numbers when I get some time and see what's the move behind that, if you will. But yeah, uh, people have been traveling, but you see things like Spirit. Spirit's going bankrupt. You see consolidation in low cost carriers. So is this just a boon to like United, Delta, and American?
But yeah, so
Or
the difference here is that the low cost, low budget, low margin is the point with Spirit Airlines and those Southwest even. That's highly competitive in that area. But when people think of travel and luxury and you know, better airlines, better conditions for travel, they're going to think of Delta and they're going to think of United. And that's what gives those two companies the moat that they have. Airlines are very competitive, but Delta and United, in my opinion, do have a competitive moat in that they are viewed as the most comfortable airlines to fly on for middle class people, at least. You know,
so based off that, would you when you're looking at this, would you look at a company like say Wheels Up, and that's a private charter system that's a low cost? It's like a let me see, like a Southwest for private charters. Would you look at them as maybe a possibility of something to purchase?
possibly. I haven't not really looked into them to be honest with you.
I tell you what, the past 5 years they are down 97%. But if you believe that people are going to start traveling more, and here's how I look at it is if everybody's going to start flying Delta, United, and that group more, there's going to be people who are going to get tired of that and move out of Delta United and move into companies like Wheels Up.
Well, yeah, I mean, if they can afford it.
So,
I do think that we still have a little bit of a pinch here with inflation, but I think the holiday season is going to beat expectations for sure.
all right, do you have any retailers you're looking at then, or are we still talking airlines and travels?
And well,
Since you
so
said
for
like it's already
me,
priced in.
yeah, so no, and then that's where I'm kind of going into retail, and it's not a retailer in itself, but I like Nike, and I've discussed this before with you on this show. I think the
Yeah, you
leadership
bought it,
change is
right?
going to be, yeah, I think the leadership change is going to be great for Nike. Um, and I think the holiday season for them is going to be very well put together. Dick's Sporting Goods, they're announcing on the 27th the most recent earnings. I'll definitely be watching that. Nike's 23% of their sales. And they've done really well over the last year, so let's see if they continue to grow.
What about Walmart? Walmart's up 72% year this year. Is that another buyer?
Again, I think Walmart's priced in. I think it's at fair value right now. I don't like to buy fair value or anything over fair value personally. I like, you know, my saying is there's always a bear market somewhere.
Walmart PE is 37.
Yeah,
That
that's you have to be careful in this market right now. There's a lot of overpriced stuff in the S&P 500. And I'm saying I think we're going to have a correction. It'll probably come after the holiday season. But I think we will have a correction, The magnitude I don't know, but it's got to happen at some point. The S&P 500's got higher valuations than it has in 25 years. And do
Well,
the
yeah,
math right
everybody's
now.
right in this
That
what is it, Goldilocks stock market right
yeah,
now, and
yeah, but we're
everybody's excited.
higher valuations than what we've had since 1999 as far as the price and earnings ratio go. That counts the dot-com crash.
Yeah, and what I've always said year over year, Brandon, you've heard me say this many times, is no matter how good of a year it is, at some point throughout the year, we will get like a little correction or a little step
Yeah.
back.
Yeah.
And it's natural and it's going to happen. And it's profit taking, number one. And number two, it's a rebalancing. Maybe people pulling money out. Like now, NVIDIA is now, say, worth 60% of my overall portfolio. I want to take some of the money out of there and rebalance it into other areas. So I have
Right.
a balanced portfolio.
Yeah, that's I agree. I'm not always huge on the balanced portfolio portion myself because I don't always have one. I just buy
Well, me
whatever's
neither.
I mean, I just always buy whatever's undervalued, and sometimes that winds up over time balancing itself out because certain sectors are going to be undervalued while other sectors are overvalued. And then, if the financials are undervalued, then I'm buying financials. If the retail's overvalued, then I'm not. So while things switch around, if I'm not selling anything, then my portfolio oftentimes kind of balances itself out. But it's more of an accidental thing than anything really.
Right. Well, what I'm talking about, like, is like you and I personally, yeah, we don't go for a balanced portfolio, but like, let's say, you're working at Goldman Sachs, you're meant to have a balanced portfolio. That's part of your job.
Yeah.
They look at stuff like that, and so, and those companies move, trillions of dollars, and so when they are rebalancing, it has a big effect on the market.
Yeah.
Definitely one I'm
It
looking
does.
at as a possible sell come New Year, or I might do a put option on is Tesla. They have a PE ratio of 96. 96. That is outrageous.
That is
That is
outrageous.
they are overvalued
Yeah, but they're
to
growing
no
fast.
end.
But yeah, 96 is too high.
I get that Musk has said, like, hey, it's our future with our robots and yada yada yada, and he has all this future stuff, but yet we're years away from that. People are not going to hold on, and for those numbers to come. No, most people don't have diamond hands like that. Most people have very paper hands,
Yeah. Yeah.
and I feel come January it's gonna have a correction. I feel like the market as a whole is gonna have a correction come January. So I agree with you, but I believe there are some retailers that are going to actually prove their numbers correct, and I think Walmart's one of them.
Well, Dick's Sporting Goods, they've been on a tear. And I just want to give you a comparison here.
Hard turn there, hard
Well,
transition.
no, I want to give you a comparison because Walmart's been on a tear too, but the price earnings ratio is around 40.
Yeah.
Dick's Sporting Goods has been on a tear. It's about 15. So that's another
Okay.
thing. And they're a former employee of mine or employer, former employer of mine. Um, but I'm not too good to say that I think that this is a nice setup here for Dick's Sporting Goods, and I'm paying attention to it to see, if I might buy into it again or not. I'm paying attention to it mostly because of Nike, but I might buy into it again. Here's what we're looking for though. So expectations right now, earnings of $2.68 per share for the quarter. Dick's Sporting Goods had FY 2024 guidance set between $13.55 and $13.90 earnings per share. FY 25 is about the same thing. So they're looking for flat guidance, FY 25. Um, Last reported earnings on September 4th, they reported $4.37 per share. That exceeded the $3.77 per share estimate. We've got back to school in this quarter. So I think they're going to beat. Back to school is a big thing for Dick's Sporting Goods. If you've ever been to Dick's Sporting Goods in August, you know it's slammed. So I think they're going to beat that pretty handily. Their net margin is 8.46%. That's meh. I'd like to see that closer to 10, but it is what it is. Their volume's been very good. Return on equity is a very healthy 45%. Revenue is what their what came in on revenue there was $3.47 billion, which was compared to 3.44 billion, which was expected. Year over year growth, quarterly revenue was up 7.6%. So a 15% PE right now, to me, that's that's pretty good. You know,
Gotcha. So you're going
the,
for a beat,
the
right?
concern is the flat earnings per share for next year, but there's a caveat to that. They are looking at opening up 75 to 100 more House of Sport locations by 2027. So I think the flat earnings per share is what reflects that. I think the revenue is going to be higher again next year for them, but that earnings per share is going to be eaten up by new investments in new House of Sport locations. And if you don't know what a House of Sport is, it's essentially Dick's Sporting Goods and Golf Galaxy put together, and then some. Then some. They've got rock climbing walls. They often have football fields out in the back, the batting cages, all that stuff. They've got soccer, baseball, football. And golf experts all on site at these house of sport locations. I've never been to one because I don't think we have one around us yet. But from what I'm hearing, it's a pretty cool experience to walk into one of those stores. So, um,
Gotcha.
yeah. So here's what I've actually got their enhanced features for the house of sport written down here. I didn't know I did, but I do. So the hit tracks, cages, golf simulators, rock climbing walls, turf fields, ice rinks, running tracks, and what they call a premium House of Cleats experience. One of the things that I've always been very impressed by when it comes to Dick's Sporting Goods, if you go into that footwear department, for example, you're talking to their athletes, the teammates out there. Sorry, teammates that work in the footwear department are very passionate about footwear. If you go into like the lacrosse area or to the team sport category, there's people that are very passionate about football, baseball, lacrosse, and they know what they're talking about. Even if they're high school kids, they hire these people that play these sports and that are passionate about what they do, and they put them in the right spot in the store. So you're always kind of talking to an expert at Dick's Sporting Goods. That's one thing that I've always been impressed with. Golf has always been the same thing. House of Sport locations see 5 to 6 times more traffic than traditional stores. And they have had so far 35% cash on cash returns. And like I said, Nike's 23% of Dick's Sporting Goods sales. So I've got a good incentive to listen into that conference call and read the earnings report because Nike reports in December and I kind of want to get a preview.
Yeah, that's a good idea. Listen to Dix to get a preview of Nike.
Yeah.
Yeah, I like that. I like that thought process. Nice. So you're thinking Dix is a good solid buy here?
I think it's an okay buy. I want to listen to 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 the earnings report first.
Okay.
Because if the price earnings per share is pretty low at 15%, that means that shows me that investors are probably not expecting the growth to continue on the path that it has been continuing. But I also know that investors are oftentimes wrong. So
Gotcha. I tell you what. So I was recently pulling up some things while you were going over the numbers of Dick's Sporting Goods, and the short interest caught my eye. Right. So Dick, short interest of to explain that for a listener right now. Right. So you take the number of shares that are available to trade.
mhm.
Right. So you say there's 1 million total shares available to trade. Right. And then you say, all right, 10% of them have been sold short. So the short interest is 10%. So that would be like, it's going off the 1 million number for the example, 100,000 shares are being sold short, or sellers have already sold them and they're waiting to buy them back after the stock drops in price. So the short interest for Dick's Sporting Goods is 5.99%. So that's a few million shares, but it's actually gone down month over month since August. In August, it was at 5 million total shares, and as of right now, it's less than 4 million total shares, 3.8 that are short interest. And one other way to look at short interest, I'm just kind of buffering your case here, Brandon, for Dix, is to compare it to the peers. So other retailers in here have a short interest of the average retailer has a short interest of 12.48%.
Wow.
Dick's Sporting Goods is half of what the average is for that sector. So that's actually a good sign, meaning that people are not expecting Dick's to drop.
You could take it either way. You really could. It's mostly a good sign that and other investors are on, board with this and thinking that it's not going to drop and they don't want to take the risk on it. But once you're up into that, 10%, 11% or higher range, if those people are wrong, they got to bite it covered, right? And so
Yeah.
if Dix was going into this with a 12% short interest, I would be screaming buy right now if you would have just told me that, because I would think that there's a good chance that they're wrong, that the stock drops. Even if there's enough news to keep this stock flat under normal circumstances, those people will be buying to cover their short position and shooting the stock way up.
Yeah.
So
Oh yeah. And I couldn't believe that number for the sector. That's high because I think like if you think all right, Dick's is at 6, there's probably other companies that are below that. So that means there's companies that are above that number right now for short interest in retail. So that's something to keep an eye on.
So what that tells me is it's one of two things. Investors either think that people don't have disposable income to buy into retail, or they think that retail is so overvalued it doesn't matter.
Yeah. I mean, you could look at it either way, really. Yeah. Yeah. I don't know how to take it, how to look at it. I typically stay out of retail. I cover earnings sometimes. I talk about companies when they make headlines, but I typically stay out of retail for the most part. Brandon, I give you the road and kind of say, hey, you know more about retail than I do because you've looked into more of these. So I kind of follow your guidance, if you will.
That's good. That's good. I'm much better than I was. I mean, you're talking to the guy that bought Macy's back in 2015, but we all make
That
mistakes.
that was 2015. That was like 2 years after you were doing options every other day.
It was actually before that, really, but
Was it really? Oh man,
yeah.
good
That's
times, good
another
memories.
thing, though. Speaking of Macy's, back then, the whole reason why is I thought that they were getting omni-channel right, but they weren't. They got it wrong. Dick's got it right. Dick's got an
Yep.
omni-channel right, and the fact of the matter is, if you go into one of their stores that are operating well, which is most of them, some aren't, but most of them are operating well, and they've got a good omni-channel department. Um, and so they've invested into that portion into their stores, right? So the omni channel, the click and collect, and all of that stuff's not taking away from the customer experiences in team sports and in footwear and in apparel because they've got a completely separate department taking care of that.
Yeah, that makes sense too. I think Walmart's done it well with their pickup in store delivery. They now have parking spots. You park in the areas, they bring out your groceries or whatever you need. They're trying to compete with Kroger on all those things as far as delivery and a monthly subscription service to get all these benefits. I think they're rolling out just as fast as their competitors are. And since they're keeping up with their competitors, that's why I look at Walmart as like, okay, there's a lot of growth here because they're keeping up with all these other smaller competitors are coming up with these new innovative ways to do things, and they're doing it just as fast as them because they have the money, the capital on hand to do it.
Right.
So I don't know. I still even at a 37 P ratio, I think they're gonna actually show that they're worth that,
You think
and
so?
that P ratio will drop. Yeah.
Okay.
But if it drops and they show they're worth it, the price is going to go up and it'll stay the same.
Yeah.
It's paradoxical how that always works out that way.
Right.
Nice, nice.
Yeah.
All right, man. What
I
else?
think
What else do you have?
I think Meta, honestly. I mean,
Well, I mean,
I wouldn't
we've
expect it to go
always
higher.
thought Meta. You and I have both agreed Meta has a lot of growth still.
Yeah, I know, but usually I'm talking about um growth within advertising, but right now I'm talking about the 299, 399 priced Quest 3 headsets.
Oh yeah,
think those are going to sell a lot. You know, a lot of people don't realize you can play PlayStation and Xbox games on those.
I didn't.
Yeah, you can.
Really?
Yeah.
Nice. Yeah, people
There's
might
there's
start
games
doing
that are
that.
there's games that are compatible for it. You can watch Netflix on it. You know, it's the
Yeah.
same thing. And there's 3D movies and all that. I think people are going to be buying that this year. We'll see.
Who knows? Oculus has continued to try to break into that console area there and compete with Xbox and Nintendo and PlayStation, but they haven't quite yet got to that level. You are seeing more and more people continue to buy them. The numbers, the actual daily active users, is what you typically look at, has gone up year over year, every year since the first one came out.
Yep.
So I have the OG Oculus Rift fresh in the box. I got it. I got my original, my very first VR back in like 2016, I want to say, to 15, 16.
Hmm.
Um, and I was using that, but then a friend of mine got his and he decided not to use it. And it was the original one, the very first one they came out with. He didn't really have too many hands or anything really going on with it. And I said, well, he was just gonna give it away to someone. I said, I'll take it. So I have that in original box, never used, bright, shiny, new,
Nice.
keeping that for memorial sake. Yeah.
Keep
So,
it, man. 20 years is
huh?
going to be worth money.
Maybe,
30 years
yeah.
even. Might be that
So,
that original Nintendo with the duck gun,
yep.
the box, those are worth like tons of money right now.
Right. So
Duck Hunt.
this brings me into like something I want to talk about here real quick. I was looking this up, Brandon. You might find this interesting. Is have you heard something about Web3 games?
No.
You've never heard of them.
No.
All right. So I didn't either. And I was starting to research this, but then we had to really jump into our podcast here. And so I kind of like, really couldn't, you know, delve in too much and figure out what was going on with this. But I got a quick overview, if you will, of this, right?
Hmm.
So let me talk it from a gaming side here. So most gamers they know like Sony, Nintendo, Microsoft, the big ones as far as gaming's, right?
Hmm.
But there's newcomers to this industry, and they're called Web3 games. Analysts are estimating that Web3 gaming market is right around $23.9 billion right now. So it's about half the size of console gaming. So my first thing is like, what are we
Wow.
talking about here, right?
Yeah.
Yeah. What are we talking about here? Web3 gaming compound annual growth rates somewhere between 18.7% to 30%.
Wow.
That's some nice growth rates, right?
Mhm.
So what they do, and this is so crazy. Web3, I'm going to read from this article I have pulled up here. Web3 gaming taps into the cryptocurrency decentralized blockchain hype. This is what separates them from traditional video games. So in the most bullish case, the market could hit 133 billion by 2030.
So it probably
Uh,
won't.
well, analysts are expecting the console gaming market to reach around 73 billion in 2027, right? But Sony is seeing this and they're building a blockchain called Sonium to support Web3 games and so that they can get on this trend, if you will, ahead of Microsoft and Nintendo. Web3 games most use either cryptocurrencies or NFTs to kind of work within the system, right? I got a good article here I found. I'm going to kind of talk about this for a second. All right. So, Web3, blockchain, and gaming. Here we go. Um, it's so a lot of things are happening here. There was Web2 gaming that was done by Facebook, Google, Blizzard, all those type of things. Think World of Warcraft, right?
Hmm.
Web3 gaming is that everything is not stored in one central place. So let's say I go in and I build out characters and everything that's stored on my wallet, it, for me to do on the blockchain. So I go in the blockchain in the game, I upload my wallet. There's all my stuff. It doesn't get changed by the developers or the game itself, if you will. And so there's a little bit of ownership there. So people like the ownership part of the Web3 games. They like the
Hmm.
NFT parts, and you could take your stuff, you could take your NFTs, and you can sell these things if you want to, or you can trade. So you own your virtual goods in these games. That's not you're thinking World of Warcraft from back in the day. They used to do that, right? Same thing, in particular, but it's also you can also change how the games are done. So players can go ahead and make updates to these games. They could go ahead and decide how the games are done. And I'm going to try to find this one here. I'm kind of stalling to find. Here it is. There's a space strategy game called Influence, right? It's mainly on the StarkNet mainnet, but Influence is the game, and there's no NPCs at all in this game. So it's
Okay.
all
Help
players,
people.
all people, and people are affecting how the universe is played in this. It's a space universe type game, and the universe changes based on the how individual players are playing in it because it's built off a blockchain, right? So when you go in there, you could create different things, and you get, you could get earn NFTs or earn tokens, the cryptocurrency tokens, from taking part in these games, and or selling things and or trading with other players in the game, right? So people are really, it's really owned by the players of the game, and that's what's really drawn a lot of people to this. And by a lot of people, Brandon, I'm talking millions of players around the world. And so it's creating a whole new system of like players owning the games and really pushing the games and getting to own a piece of the game, if you will.
Hmm.
Another famous one's Blob Arena. Is where, it's like an MMA fight when you put different armor on your guy and you put him in the ring to fight different players, and you can have different types of armor. Joe Rogan was recently shouted out on some of his podcasts recently about it. So it's taken traction, Web3 games. And there's a lot of different things you could do with it because you're using blockchains as the base for the games. So you're not storing it on servers at, say, Microsoft or Meta or somewhere. It's actually on the blockchain itself. And that's what's making it more, I want to say interactive, but the players feel like they have more control over it. You know what I mean?
Democratic, so to speak.
Yes, there you go. That's a good way to put it. But yeah, it's a brand. It's not brand new, but it's new to a lot of people. They don't understand what these things are, right? So let's talk about this. Paul Thomas, founder of the blockchain project Somnia, a blockchain geared towards Web3 gaming and other applications, said that despite the bear market, Web3 games are getting better and the user base continues to grow year over year. You got games like Pirate Nation, Parallel, Off the Grid. All these things are coming in. The game is, I mean, it's just, I have all these numbers here I pulled up, and it's just crazy. So, Pixels is another Web3 game. It reportedly hit over 1 million daily active users for the first time this year for a Web3 game that I've never heard about.
So, from my understanding and kind of what you're saying too, if you were to get like a highly sought after collectible on a game or something, you could then sell it for cryptocurrency, which would be transferable into real money, right?
Yeah, I mean, that's one aspect of it. Yeah, but it's also you keep it. So the game doesn't change. Like, say you get a really cool sword. That's the most common
Yeah.
thing in some of these games, right? Got a really cool sword. The games can't change how that looks, how that what the name is, what that's worth. It's yours now. It's on your part, it's in your wallet, if you will, of that blockchain. So
And
it's
there's an
it's
actual real market for that sword then. Or for example, if somehow Madden never went into this direction, for those who play Madden Ultimate Team, if you got a highly collectible card on Madden Ultimate Team, you could then sell it for crypto and make
yeah.
real money on it.
Oh yeah, yeah.
That's pretty cool. I like that.
Yeah, it is cool. And then some of the games just you get on, and I've talked about crypto staking before, and by just playing the game, you're staking,
Now
and
you have to buy these games with the real crypto?
So yeah, some yes, some no. You have to go on there. There's a whole bunch of games. There's hundreds of these games out there. So some yes, some no. Most of them no. You earn from playing. You just get on there, you spend time playing, and you'll earn it, and you'll eventually you could grind it out and get it, start it for free, and build your way up.
Okay, so there's some free to play games.
Yeah, yeah.
Okay.
Um, but yeah, it's a whole sector that I was unaware, and I've played video games since I was a kid. And just to show you guys my age, that's 80s, 1980s.
Yeah.
Um, so for me, this is a whole new sector I wasn't aware of was out there, and it's kind of cool, and I like it. I like the thought behind it. I like that one Starlink or was the name of it, not Starlink. I'm thinking of that Musk company, but the space one where there's no NPCs and it's just individuals who are affecting the gaming universe there. And I thought that was a really cool aspect of it
Yes.
as a
Yeah,
gamer.
I like that.
So I mean, there's some good eyes, but look it up. Web3 gaming. There's some investments out there if you want to get into it. I think it's a new sector. I think it's going to continue to grow, especially over the next few years, and especially as more and more people hear about this. The fact that Sony's getting into it means I think Microsoft should say, a year away from doing something as well, and Nintendo definitely is going to get behind it with Pokemon Go. Imagine what you could do with Pokemon Go if on that same type of platform or Pokemon in general.
Yeah, or Animal Crossing or any of the Nintendo Switch games.
Yeah. I mean, so there's a lot of opportunity here, but finding where to invest some money is going to take me some time. I just came across this and I haven't found where to put the money yet, but it's on my list. I'm looking into it. It's something I want to research and find because I believe there's a future here, and I believe there's a good opportunity to make money if you invest it correctly in some of these companies that are owning and operating these.
It's an interesting concept, and there's a real market here if this works. Because there's a
Yes.
lot of people that love to play these simulating games or, Animal Crossing or even Disney Dreamlight Crossing, Disney Dreamlight Valley, sorry. um, where you have to get these collectibles and all that. And they like these grinded out kind of games. People like that now. So I think that there's a definitely an interesting concept to add a real market into this where you can buy and sell stuff.
Right? And you own it. If you earn to get whatever that card was or that weapon or whatever it is in the game, that's yours. That's in your
Yeah.
wallet now.
Yeah, think about how much money companies are making off of right now when it comes to in-game purchases.
Oh,
And then
it's
now that's
billions
and
probably.
and now that would be a market where it's going to be people buying and selling stuff from each other. It's interesting.
Right?
It's very interesting to me, I think.
So let's say you earn some tokens, and I'll bring this back to 2024. Some gentleman I was working with recently was playing Fortnite. He had all these Fortnite skins and different, accessories and everything. Say you got tired of the accessories, you could probably turn around and if it was a Web3 game, you could go
Yeah.
ahead and say, "Hey, buy these Nike shoes off me and sell it to some kid for less than what Fortnite's selling it for."
Yeah. And now it's kind of like all geeks getting into it, right? The first timers and the
Yep.
people who get into the technology for the first time. Eventually, the market might ungeekify.
Right. And that's what I'm talking about is like everybody's looking for ways to number one, have fun, and number
Yeah.
two, find a way where you can earn money at home, as a side job or side hustle, quote unquote, while having fun. Nobody wants to do something they don't enjoy. So I see this really taking off once everybody is aware of it. Once everybody understands that it's out there. I see an opportunity for this to really blow up. But
Yeah.
I honestly couldn't tell our listeners right now how to invest in it. I'm
Yeah.
looking into it.
And I'm not insulting geeks. I'm a bit of a nerd myself, and I've got no shame over it. So,
Right. Same here.
yeah.
But that's all I got for this week. So if you're ready, let's move into final thought.
All right, let's go. You want to go first, or am I going first here? I don't. I've
I'll go
actually
first.
got one.
I
I've
no,
got one prepared.
I'm gonna go first, and I'm gonna let you close out the show. All right.
All right. High
All right. So
pressure.
my final thought this week is gonna be about Bitcoin. It shot up near to 100K. It came back down to 96K. and it's on its way back up currently right now at 97K. But the moves in it are volatile and they're up and down, up and down, up and down. I've been very honest. I own some Bitcoin. I've owned it for years. I don't plan on selling what little bit I have left. I plan on giving that to my daughter when I pass. But if you're a long-term investor on Bitcoin, don't look at it. Just forget about it and just, move on. But if you're not, and you are trying to make quick money off this, you're going to make better money off of the stocks that trade off of Bitcoin, such as Mara Holdings, such as Riot, Super Micro Strategy, those type of things. And if Bitcoin stalls out, they typically go down. It's only when Bitcoin is moving up that they move up too. When it stalls out, they kind of go down, and when it goes down, they really go down. So they never quite grow at the same pace and point as Bitcoin. So you need to be quick in and out with it. But if you don't know what you're doing, I would say don't do it.
Okay. Yeah.
Stay out of it. It's too volatile. If you don't have experience, stay away. I know it looks like it's a quick, good opportunity to get in, make some quick money, and to the moon, and rich and all that. But you're most cases you'll lose money over making money. And I would rather make safe investments in companies that you understand and have good futures and solid balance sheets than go ahead and try and make $1 million in crypto in 1 month. So
I agree.
that's my final thought for today. Brandon.
And a lot of people are getting a little bit sour maybe on the stock market because of the current geopolitical events, and I would tell people to not worry about it. I've always said, look, if Russia drops a nuke on us or somebody drops a nuke on somebody else, then the stock market doesn't even matter at that point, right? Like money doesn't even matter. Maybe gold might still matter, but that's even up for debate. It's more of a likely that it will matter, but um, I don't think it should affect your decision making. And clearly, people going back 80 years have agreed with me because I pulled this off of Barron's, by the way. Following 36 major events, starting from Germany's invasion of France in 1940, the S&P 500's 12-month and 6-month average real return were 5.5% and 2.6% respectively. Yeah.
Wow.
So no, I mean, it doesn't really have much of an impact. And World War II we were coming out of the Great Depression then. So we were kind of coming, from nothing, to be fair. But these rarely have a lasting impact on the stock market. You could even go back into, if we want to discuss all of human nature, in the 1980s Lebanon stock market during the war, during the civil war in Lebanon in the 1980s, the stock market was flourishing. Didn't crash until after the wars were over. So I wouldn't worry too much about it. There's risk in everything. Just buy what is valuable.
Nice. I agree.
So,
Good thought.
yeah, that's my final thought. I actually had one prepared.
Nice. All right. Close this out, man.
Wait, you close it out usually. I hope that we were
All right.
enter-
Fine. Fine.
No, wait,
All
wait,
right.
hold on.
Thanks
I'll
for.
do it. I'll do it. I'll do it. I'll do it.
All right.
I hope that we were entertaining, educational, and uplifting.
Have a good night.
Have a good night.